7, 6, 5, 4, 3, 2, 1. Event has occurred.
Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars so you can get a sense of the process that you see here every day. The idea of this stream is to help traders understand that trading is a business, that is a statistically based business, and it is not a predictive business. So it's very important to differentiate between the need for confirmation and being right versus the need to have a statistical edge. And it's a big difference in the sense of how you will actually experience this business and what you might focus on in order to solve for being able to potentially create a business here. So that's the purpose of Trader Lab. It's a community of traders who've come together to leverage their collective experience so we can all do better. And it doesn't matter how long you've been trading, whether you're new or whether you've been at it a long time. The thing about it is we can always improve. This is a high performance endeavor. All the work needs to be done outside of trading hours, and basically you bring your plan to the market, and then as the market unfolds, when the market and your plan are in alignment, and by alignment I mean your plan that has a statistical edge under a certain condition, and you have vetted that so you know where this edge shows up, your job is to patiently wait for this edge. Otherwise, you're just sitting with the gamblers on the other side of the table. And the business of trading is really gaming. So if we use a successful business model, casinos, we understand they have games they play, but they don't control the cards, and they don't control the cards coming out of the deck or how gamblers play the cards. So just like us, we don't control what the other participants do or news events or just the wind blew in a different direction than we were going. We don't have that control. The control we have is over creating a plan, only interacting when we have a statistical edge, and that's really what the casinos do. They only play games with an edge. So if we take that business model and overlay trading, we might have a better opportunity to create sustainability. And of course, past performance is never indicative of future results, but you can learn this in the Trader Lab and there is no cost. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only, but if we get into real time, we'll talk about it. Okay, grab your pen and a piece of paper. I'm going to give you a couple of statistics, all of which you have to vet for yourself. Now I'm going to take a look here for us. Let's take a look at the higher time frame, but then I want you to write a couple of things down. This is as of yesterday's RTH close. These are RTH candles. I do this every day in the stream, so I just want to point a couple pieces out to you. 60-68.5 is what's called a low volume node, is an outside edge of a distribution. The market, of course, can go anywhere, right? The highest volume for all of this behavior, and what I do, and everybody can do whatever speaks to them. There is no right or wrong in trading. It's what you can determine works for you in the sense of how you relate to it. This is a swing high. This is a swing low. What I'm doing is I'm looking at all the volume in between the swing high and low. That's one piece. And that says, at the moment, up until yesterday, the highest volume was 88.50. The market tends to rotate away and back towards these locations. Now, what we don't know, it's part of the thrill, is if we open lower, are we going to come down to the level below at 49-ish? And then maybe come out the bottom and take the longs out that have stops under here. So that's one piece. Okay, so sell stops are here. The other piece is we have stops over yesterday's high of the day, and we have a target up here at 61.09. So we can do this. And this is called the distribution, and this is the higher time frame. And I always, so let's think of this as fractals. Higher time frame, intermediate time frame. This is representing all the volume that's ever traded up here forever. As long as the S&P's been up here, this is the volume, and it's all of it going back to whenever we were up here. And then this is only from here to here. So I'm breaking it down. Now let's go to Bookmap, and now I'm going to give you those statistics that I was talking about. So we're opening lower outside of range. So yesterday's low is here. RTH open is here. And here's some statistics for you. This is the ETH volume point of control. When we open lower outside of range, and you have to vet these for yourself, there's an 85%-ish probability that we'll get to this level. Now, the thing about it is we don't know if it's going to be the southern border route or the North Pole. We don't know how, if, or when. That's part of the randomness of the behavior. RTH low, there's about a 64% probability we'll tag this, and the previous high or low, 64%. Taking out the first hour's high, which is going to be called the IB, you'll see it later, first hour is 67%. And then we have value areas and other areas. Previous point of control, 31%. So the skew is somewhat to the downside. So those are just a couple of statistics, and you have to vet these for yourself. It's very important that you understand that nothing is mechanical in trading. I know we would love it to be that way, black and white, red, green. It doesn't work that way. It's always rotating, and it's always random. By the way, currently 60.84 is an important level, just so you know. We will talk about that, but you can make a note about it. Let me just check something. Okay. All right, so let's go take a look. Now, for me, when I started out this morning, I was actually looking to get on the short side. I was looking at a breakout of yesterday's consolidation, so I was looking for shorts. So I was looking for responsive buying, and then I was going to fade it. And so I was looking up in this area to test up in here, and then if it failed, it would fall out, and I was going to go for ETH low. So my first trade I was looking for was a short. Just me. Now, here we get something called VPOC migration. And this is an advanced process. It is in the Trader Lab. It's available to everyone. There's a library of webinars you can all access, and if you're inclined. And I did one specifically on what this is. This is shopping. So when the market opens, I'm going to start marking these. Something is not quite right here. Hold on. Okay, maybe this will straighten up here. Hold on, guys. I have a little bit of something going on here. I just want to check. So this says potentially the market's going to move higher. So I'm looking for the market going higher. So I'm seeing the buyers. So, and my target area initially is up here. So test into yesterday's range, and this is the retail price from the ETH. So the way this tends to work is if we come back and this tends to be too high, we can bounce off it and then potentially go down to the ETH low. So that's what I was looking to do. Just the way it is. So I come up. My overnight volume point of control is here. Right here. So right here, I'm seeing buyers, and this buyer here is absorbed. So I'm looking at the volume in here. Right here is my location. So this for me was a short, and you'll see how it turns out. Not so good. I got stopped out. Okay. So that was my first trade. Took a stop. That's the way it is. I don't think too much about it. But the way I operate with this kind of a thing is right in here. So I read this, and my idea was to fade the overnight volume point of control. And then I got just taken out of it like right away, you know. So, and then once that happened, then it was sort of like, okay, now what, you know? So once that happened and I'm above here, then, and at this point, I did not take any more trades yet because I realized here, now that I'm over the overnight volume point of control, there's a couple possibilities. I might rotate back here. That's one, or back in here. So right in here, I had nothing to do. So I was not very active this morning. Just was not my morning for me. So variable high volume node, I'm going to label this. And I'm going to get the one down below also. I got to get that one too. And the other high volume area, this yellow line, is right here. So I look at these as a form of support. In some trouble here. Let me just see if I can get this to work here. I think my mouse over here is starting to wear out. Okay, so too low, retail. VPOC migration, retail. That means everything below might be too low. So what you have is values moving higher. We are over the overnight volume point of control, and now we have multiple distributions. What a distribution is where you have these rotations or consolidations. And if we break away from one of them, it is saying it's too low. So if we come back to it, it also can set up a possible long. So we want to label this. By the way, if you have questions, post them. I'll do my best. I can't see them right now. They're in a separate monitor, so just put them in there, and I will do what I can. So the outside edges of distributions are called low volume nodes. The high volume is like a retail price. One of the ways to think about this, and this is kind of how the market works, is it's an auction. And what it does is it goes, what's too low? Notice only 75 contracts went off there. Too high, too low, and it'll rotate, and then it has a price. variable high volume node. Or that's where the VPOC was located initially. If it's too low and we leave it, then we do the same process up here. Too high, too low, too high, too low, retail, right there. If it's too low, we leave it. And then we keep doing this sequential process. So basically, actually, I want to go to the current market. I want to show a long that just set up. I think I'm going to do that. I want to show it to you because it's the concept I'm speaking about. We are in what's called a trending configuration at the moment. In a trending configuration, now let me just see if I can show you this. Variable high volume node. Here, this becomes support right here on this rotation down. That's one. So this is one potential long if you want to be long. This set up a short rotation here. I'm not going to spend time with these. I do them every day. I want to show you the current trade. And what you see here is we are moving away. So this sets up, let me put another little node in here. And what it's representing, these nodes, is outside edges. So when we stop and consolidate and rotate, if it's too low, then we can leave it and then we can sequentially move. Now we have a big distribution up here and the last long was out here, which we will take a look at. Then we'll be very much in the current market and then we can spend a little time looking at the behavior. So low volume node, outside edge. So this is called mean reversion. So if we accept at the moment the market's going higher, perhaps, and if we can accept that yesterday's high has a high probability that this is a target, and we can also accept 6,100 is an important level, and it's on the map. So I'm looking, and it's not a prediction or a recommendation that we come out above here and get here, maybe. And if we get through there for some reason, then we have 07 and 10. So those are the targets. And I think those were yesterday's targets also. So it's a matter of which way, the wind blows. But let's look at the long now. It's out here, LVN. So when you see these outside edges of these rotations, what they are is when you have a distribution and it rotates, you're trying to find where's the outside, and if you can find a place to get long, which would be there and possibly here, you'd be leaning against this right here to the outside edge, and then your idea is to come back and rotate back up, and the idea is to come out the top if you can. So let's just look at it. So here's your outside edge. Here's your support. It's microstructure. I'm going to put a little line here. I'm going to show you just kind of how this might work. What this is over here, let me open it up for you. And by the way, if you have questions, post them. I'm going to take a look at them if you have them. Let's look at this first. So this is trading in fractals, basically. This is a sweep. And typically what we look for if we have a sweep is a counter rotation. Okay? So we didn't get it. We broke high. So this volume in here, this is an auction. Every consolidation is a pause where sellers and buyers are interacting. And if you want to think about what's really going on in a consolidation is sellers are up here, buyers are under here. Who throws in the towel? And you got this shows up here, 1,000. And we kind of discussed this in Trader Lab. Look at that. And then you take it out. That's very powerful. So what I know is these buyers consumed 1,000 contracts here. That's pretty amazing. So that's a very potent environment to be in. So shorts are not necessarily on the table unless you're a counter trend trader. So this is too low. So my outside edge of this, and I'm just going to kind of draw a little box for you here so you can kind of see what this looks like. So what this creates is this edge. So this consolidation is here. This last little fractal, so these are all inside each other, think Russian dolls, is here. There's your resistance we broke through. You know the old saying, resistance becomes support. So let's go take a look. The outside edge is here. Let's just look at it. Outside edge, low volume node, support right here. This is a long entry in Trader Lab. Now, what you have to do with this is your resistance is up here because this is where the sellers were. So let's mark out our resistance. We have that high volume up there, and we have volume here. So if you look at this, the buyers are here in this volume. So that would be a support area because we broke above it. We held it on the test, and now we're going higher. As far as we don't know, like everything in this business, we don't know where to. So then it's just a matter of this is your support. I get high volume here, I break down. So if this is going to hold, it needs to hold this support area. Breaks down, goes back to the low volume node, and then it has to clear the high volume to continue higher. Has to get above here. Right there. So this is a way to kind of think about support and resistance. Notice where we come back here. So support is here for the long. There's your resistance. Support is here. This is your resistance. And now it appears, of course, that we're going south of the border. Where's our IB? 82.5. Oh, it's right here. Okay. This is the IB, the initial balance, first hour high. There is over a 90% probability we take it out, which we already did. And that's set at 9:30. This sets up something called the IB failure. And this is a mean reversion trade. It is a potential short, but we have to be careful here because it also could set up a long opportunity. So we want to see the behavior. This is an outside edge. This is an outside edge. We're going to watch this very carefully for continuation long. So let's just watch it here. These are not trade recommendations. So right here we have absorption, and we're looking for a potential trigger. And it's not, again, this is a location. There's a name for this. It's called the IB continuation trade, but you have to have a triggering structure for it. Stops are here and out here. So any of these areas are areas to observe. So let's just see the behavior here. Now we are outside of the upper distribution. So, and down around the mid is a low volume zone around 78-ish. So we have to be conscious that there's going to be stops at the VWAP and the mid, and our outside edge is sitting right around in here, right in this area. So we know there's going to be stops here. So we have to watch this area. We also could have a short here. We have two trades here. One is a continuation trade. The other one's a short. And falling out of this distribution potentially sets us up to come down here. So we're going to have to see. So this is called the IB failure. So we have either a long here or a short. One of the key elements is was a target coming up. And we still may come back and take out the yesterday's high and go to the next target at 61. In the meantime, this is the target here. And none of these are trade recommendations. All trades, the outcome is random. So what we know is if we take the IBF, that we can anticipate a reaction at the VWAP or the mid because we get mechanical buyers and they might be right. So if we come out here, we can come up here and actually all the way back here. So we have to just see how it behaves. Uh, 6109, I'm getting a question, why was the 6109 important? Because it's a area of, it was a single, and when we had the big down day the other day, or Friday, I think it was, this was where the market accelerated, and it's a thinly poor auctioned area. So if we do get up in here, this would be a target. If we get up there, if we don't get up there, but we have to get through 61 first. At the moment, though, we are working towards lower. What happens with these is, right here was a lot of volume, and we broke away from it. So what the market's going to try to do is find out what's too low. And the next outside edge is going to be down here. So what we're looking for, and this is a mean reversion trade, is the possibility to come here. Now, possibility is all you have in this business. The outside edge is sitting right here. So to get over here, we got to get under this. So this is sort of your dilemma, if you will, for this trade. So we'll just have to watch and see what it does. So in the Trader Lab, we have structured trades. There's when it comes to the IB, this is the first hour's high or low. It's called the IB stat, and there's over a 90% probability that we take out either the first hour's high or low, and you've got to vet that for yourself. There's also a high probability we take out either the ETH high or low, also over 90%. So those are very high probability statistics. So this was a high probability statistic. This yesterday's high is a high probability statistic also. And so is yesterday's low. But all things considered, since we're inside the range, there's a pretty reasonable chance that at some point we might get here today. So this is really a bit conflicted because we can mean revert and later go up there or not, or all we did was come out to an outside edge, which is there, and then we return back here. Those are the two possibilities here. So it's either back here or here. And I couldn't tell you because I have to get under this in order to get to that. If I can't clear this, then the potential is to come back here. It's going to be one or the other. And it's not my job to know which one. So let's see what it does. It's not a Bauer. It's not a naked volume point of control. I left it up there because it's important level. I should put a P in front of it for previous. Sorry for the confusion. 6100 was an important level, so it was a naked volume point of control, so that's important. But the fact is that it was the behavior that took place, and it's a strike. And previously, we had a lot of liquidity sitting up there. So it's just something on the chart that I want to be conscious of, because if we get through these stops, we might only get up here or, go wherever it goes. But I don't want to forget that this is important. So now we're back to the VWAP, and we have buyers at the VWAP. So now we've got to remember what the trade is. Either we're going to come here, or we're going to get under these stops here, and then we're going there. And I can't give you any more about it because I can't predict anything. All I can tell you is, the trend is up. The buying has been fairly aggressive. A counter trend trade here is very aggressive in this environment. So if you do take this short, you have to know you're standing and you're leaning against the wind. So you have to be very conscious of that. And if we can get below here and get the stops out, and there's going to be stops here, and also there's going to be buyers here. So we're going to have stops, we're going to have buyers. If I get enough selling, I'll come here. If I can't and I get the buyers here in this area, then it's going to set this up, and it's going to be one or the other. Now, here's the question for all of us, me too. Do I want to be long or short? Well, trend is up. That's one piece. The other piece, and I have stops above yesterday's high and all this, but what about the longs that are currently in here? All these longs, what about them? And where was my support? Well, it was there. I'm below it. So where's my next area of support? It's in here. I'm below it. If I can get below this outside edge, which is this, then I can maybe come here. So that's it's like a sequence of auction or consolidation, which is an auction. And if I fall out of here, then I'm looking for this. And that's as far as it goes at the moment. Now, we have to watch the behavior, because it would not be unreasonable for retail traders to buy the mid or the VWAP. So we want to see what happens right here. Let's watch this behavior. See if we can read it. Liquidity in the book, buying iceberg, sitting here. We have to watch now for a little rotation down. 78 is structure. And let me show you where it comes from. Here. This is a micro support. It's right there. Let's see what happens. And we're trying to get here. Let's just watch. So we have some support right here, and we're trying to go here. Not a trade recommendation. Let's just watch the behavior now. So the idea here is that the market tends to check volume. Think of it like a store. So now here we have iceberg buying. This is absorption. We have to see what kind of rotation we get out of this. Are we going to get here, or do you just manage your trade? So let's watch and see how this behaves down here. I'm not seeing aggressive buying at the moment, even though I am seeing some absorption. So we'll just kind of try to see what it's going to do here. So this is where the sellers are. Sellers are here. Sellers are down here. We want to see if the buyers can get above these sellers. The last pace the sellers took over was right here. So this is kind of your resistance. One way to think about it. Sellers are here. Buyers are here. Sellers took over here. So this might be too high. So this is resistance. Let's see if we can read it together. Microstructure is here. Sellers are here. Sellers are under this volume, and we're under here. So all this is resistance. So we'll see what it does. The idea of this trade, if it works, is to come here. It's not a recommendation. It's just a target, and who knows? Part of the joy of randomness. So this is the IBF, and it's a structured trade in TraderLab. I mean, if it gets to target, it's a 10-point trade. So that's not too bad. Are you guys with me? How we doing? Okay, we want to watch this here. So this is our target. I always give it a tick or two. I can't tell you how many times, it gets there and I don't get filled. So I give them a little extra. It's like making your donation to the Floor Traders Retirement Fund. So let's keep an eye on it now. In the meantime, if you have questions, post them. I'll come up for oxygen here and take a look. If you're in YouTube, please give a like. So you would have your target. Now, if we keep going, so here's what this is. The primary target, this is called the mean reversion trade. And we always joke in TraderLab, yeah, it's mean. So the short is from here to here, but we can also come out the bottom. And if we do that, it becomes something called a neutral day. So a neutral day means there's both sides active. So we'll have to see if it does that. Remember, our job is not to predict. Our job is to align. So nobody predicts anything in here. Now, if you can, of course, always come to TraderLab and share with us how you do that. But we all start out in this business pretty much thinking that we can, quote, predict what's going to happen, and then we look for confirmation for our prediction. We're not in the business of prediction. We're really in the business of alignment. It's a big differentiator for where you put your efforts. It's not about all the indicators to get certain, and it's not about the time frames and the indicators. It's really about market mechanics. And then however you can put together a process that gets you on the right side of the market in a timely fashion, and then understanding where the market might go and why, not predicting. Why did we come here? Because it's the highest volume price. Why did we think once we fell out of this, what did that say? It's a language. This is too high. I'm not paying that. And then we start sequentially moving down the ladder. Think of it as a ladder. And now this is very important right here. Remember, we were talking about it. I was saying, well, this is important, VWAP and all that. Well, if we break under there, then we come here. If we can stay below this and get under here, then we can keep going. If we can't get under here, then that might be the end of it. And then I've got my low volume node up here. so I can trade these nodes. But the idea of the trade was just really take the short, go to here, then manage your trade, and you could be done with the trade. Nothing wrong with it. It's about a 10-point trade. So that's trading, guys. I mean, it's not about miniature golf where you're trying to hit this, hit that, hit this. At least not for me. For me, when I put risk on, I want to get paid. So I don't get paid if I'm messing around, sell this, buy this, sell, what am I doing with this? I can't do anything with it, so I don't do it. Because it's about how timely can you be. Well, by the time as a human being that you recognize something, you would have to put a limit order over here and maybe a stop up here, So the idea is you wait for these trades. Notice the support. See? Break low. This sets up your short here or there, right there, or there. All these are short entries for the IBF, and then it's here. So that's the IBF trade. It's right there. You can screenshot it. Now, this is the primary target because the IB failure is what's called a mean reversion trade. And this is the mean. The highest volume in the developing time frame, RTH, is right here, this yellow line. And that's called the mean or median. So it comes back to it. And then it's checking it. And if it's too low, we can, rotate outside. If we get below this, after rotating, we can keep going. So what it'll do, that's not our job. Hope that makes some sense. So what we're trying to do here, and, some days, just whatever the market offers, that's an alignment. That's kind of our job, is to take those trades. For me, the long side, I didn't get much of that. It was really, for me, I was looking for shorts, as you guys know. So, but now I'm in alignment. So that's just the way it is. It's not like there's a right or wrong in trading. Everybody goes, well, are you doing it right or are you doing it wrong? I don't know what right or wrong is, but I'll tell you, statistically is really where you can decipher where edge is. It's not the outcome of one trade. So there's none of this, I was right or I was wrong. It's the casinos play. The only way you can measure what's right is following a plan and only interacting when you have a statistical edge. That's what's right in this business. It's not FOMO. It's not bailing out because of your emotional stimulus. It's just taking the trades. And if you don't have a trade, you don't take a trade, in spite of how you might feel about it. I mean, I know for myself, this thing is running away and I'm having feelings about it. But I also say to myself, you've been through this so many times over so many years. 45 years of trading, you've been through a lot. I just know I have to be patient because a trade will come. And I just have to then not get hooked on the idea of what I could have had. I'm really more in the business of where's my next trade. And then that's it. This is my next trade. So it was either going to be a long here or a short. And we got the short. That's how I look at it. So I'm a lot more patient than I used to be when I was early on in the business. I was very much stimulated much more by my emotions and FOMO and over trading and all that. I think it's fairly common until you start keeping some statistics and records and you see what it costs you to do that. You can and I developed something that I've shared in the Trader Lab, and you're all welcome to it. If you're visiting in YouTube, you can use the link down there if you're interested in this. Something called an error cost calculator. And I quantified what my errors cost me. And if you figure out that you're throwing, let's just say, thousands of dollars a week out the window, giving it away, one thing to lose it because that's overhead and cost of production. In the casinos, they do pay the gamblers. That's their overhead and cost of production, plus the cocktails and the tickets, the buffet. But here, We take a loss for a structured vetted trade. It's just overhead. It's part of the random distribution. But when you make an error, that's throwing money away, no matter the outcome. Bailing out early, making up a trade, impulsing in, FOMO, all that. Sometimes you win, sometimes you lose. The fact of the matter is, if you have behaviors that are not in alignment and you get paid, now you've reinforced your mind that you can do that and it's okay. Yet there's no statistical edge doing that. So because we all have winning trades. If you have nothing going for yourself, you're still going to have a winning trade. There's no skill required to get a winning trade. There is skill required to understand where your trades show up, where you have an edge. That requires the work to determine what that is, like the IBF. That's a structured trade. These are trades that I started. I don't remember when I started doing this trade, but it was a long time ago, maybe 2007, 8 or 9, something. I came up with this trade. So a lot of these, and I've shared these in Trader Lab. I've been doing them a long time, and now, of course, derivatives of them. But I shared 60 PDFs of these in Trader Lab, and the idea is not that you do what I do, because you can't be me, I can't be you. What it is, can you take information, can you relate to it, and then can you kind of craft it into your own groove, or where you can relate to it emotionally. In other words, some traders are going to put a trade on and sit with it till the market goes to zero. Other traders will just put the IBF on if that's their trade and it has an edge, and they'll manage it. They might only take it to here, or they'll take it here for the scale, and then they're going to manage a runner. Because if we can remember what we have to do, we have to get below here to go lower. If we can't get below here, then this trade might be done. You see? Now, do you know which one it is? Well, if you're using trade management process, right here, if we can't get below here and you see this kind of buying, this trade might be over. All that's part of your trade plan. I was talking, by the way, about this error cost calculator. What I figured out was my FOMO and my impulses and everything were costing me thousands of dollars a week. Not a month, a week. And it was a great exercise because it made it tangible. Because when you're in the heat of battle, you're not really paying attention. It's just, now the next trade, right? And we don't write down anything. So I just took the numbers, and then I wrote a check out to my least favorite entity, if you will, and put it on my monitor. And that did a lot, because now something that was nebulous became tangible. So this trade's over, okay? But remember, the objective of this trade is mean reversion, which is right there. So here, and our resistance now is up here, but what's the trend? We think it's up. So here's your choices. Short on the IBF to here, and then trade management. But what else is out here? Outside edge, low volume node, right there. If this is too low, then what? Then potential rotation. Now, it's not for me to say, buy it here, sell it there. That's not what I do, because you could maybe just take the trade to there, and then that's it. Or if you don't want to trade the counter rotation, which is what this is, you are not doing anything other than looking for a long for what's called a continuation trade. So there's two possibilities in here. Blowing out, taking the stops out, looking for a long for a continuation, or counter trend, getting the stops. Where are the stops? In here for all these buyers. Now, where's the fuel in this leg down? The buy stops for these sellers. This is market mechanics. The market goes up to go down, and the market goes down, go up, in all fractals and all time frames. So your choices are short, or nothing, and long. And why? Mean reversion, outside and then back towards the outside. So we want to see what happens up here. So let's be conscious of that. Now the trend is up unless it changes. So let's go take a look. High volume is here, which puts the outside edge around here, right there. So this is our resistance. So what we're doing is right now we're trading this out here to out here at the moment. So let's watch the behavior. And your high volume is sitting up around here. So I'm going to put a little line over here. So what I know is my outside edge is here. So this might be, once we get up into here, resistance is up in this area. If I stay under this volume here, I can then rotate back down. We'll see what it does. Questions? Why was it not an IB continuation trade? Well, we fell out of the distribution up above. This is very important here. This is big volume, and we fell out of it. Once we got under here, then at that point, if I did take a long, this is my obstacle, but we didn't get a long because we came under the IB. So that just, we didn't get it. Now, support was here. This was a potential mean reversion trade up to this. We came back here again. It sets up the long back to here. But if you can't get above all this, then once you break here, then it's the IBF. It's a short to there. Then from here, if you can't get under here, it sets up the rotation back to there. And the resistance is really right there. Pretty much where we are now. Now, to me, the trend is up. But so if you took a long out here, and I'm not saying you should, this is where your outside edges of this thing. So we want to see the behavior here. If it keeps going, then we're back in the game for the long side. Right here, though, it would have to clear. So let's see what it does here. So a couple ways to think about this. If you took the short, you're primarily going here, and then you're going to wait and see what happens at this low volume edge. If you got long, you're primarily coming back to the IB. So here is a resistance, and then you're looking for the outside edge here. We're getting through it, and then you're coming back to this. So now we want to see what happens, because there's going to be stops here. You could trade any side you want. The thing you need to be doing is, there's nothing mechanical in this, and I could see why the IBC might be a viable trade. I mean, I'm looking for it myself. But you got to go with what the market participants say. There's nothing mechanical. So it is not about thinking, oh, well, it's, the trend is up, we come to the IB, and I automatically buy it. I got to look at triggering structures, and I have to get risk neutral. So if I took the IBC, I'd take a stop, or I would get scaled and take a stop. That's just the way it is. If I get the IBF, I get a 10-point trade that takes care of the stops, So, okay, we're outside of this. Our next level is going to be up here for outside edge, and stops are sitting at the IB. So we want to see what happens right here. Remember, the trend is up. The E and C, these are icebergs. These are selling icebergs. These are limit iceberg orders. that are executing. So they're selling into this. The C's are just canceled. So here, 85, they canceled 8. And this is the stops. So this is showing me buy stops coming out. 98 and 5, this is stop divergence, limit iceberg sellers, and we're at an outside edge. So we want to see the behavior here. And now, if I see a rotation here, with the trend being up, I'm not going to fade it. Now, that's up to you, but I'm not going to sell this, even if I see a rotation down. I just don't have to do anything here. But I know I'm where I am. I'm right at this outside edge. Now, the thing to also keep in mind is we had this outside edge here. We went through it. We're now checking this one, and the trend is up. So if we were going to stay in mean reversion, we would have not gotten over this at this time. Now, if we can't get over this one, we can, in theory, come back here. But with the trend being up, I think we already took our longs out, the weak longs, and now the buyers came back for it. So we want to see if we're going to get yesterday's high and up to our target 61, and then the target above 0708. So that's it. That's the lay of the land. Now, how it gets there, that's the part of the thing, that's a problem for us, is randomness. Notice where we come. So we're in and out in an area. Now, that the fact I see this doesn't mean I sell it. It just doesn't matter to me. Because do I have an edge here? I might get a little rotation here, or it may, could do anything, but it's not a trade for me. So I don't do anything with this. Though there's pieces here that suggest a rotation, but that's not a reason to take a trade. I'm getting the question, why is the trend up? Because the market's been going higher. And it's rotating back on itself, which is pretty typical. So in this leg, we have shorts, and there's buy stops for the sellers in this leg. Well, what's happening to them? Well, they're getting squeezed out. So the buyers have come back. And why did the market come down? Which, of course, it doesn't have to do, is because of the buyers in here. So the weak hands get thrown under the bus. Once we have shorts in here, and these guys, a lot of them are taken out, then the buyers come back, and then we go the other way. That's called trading in fractals. So we're trading inside of rotations, and as a day trader, now when we say trend up or down, this is in reference, I think we can say the trend is up, considering it, all-time highs are up here, right there. That's the all-time high, 61.70, 75. Yeah, we're 100 points away from it. I get it. But unless we fall out the bottom, trend is up. Intraday, though, it could be whatever your time frame. So if this is what we're trading right now, this range. So basically, we're in a big consolidation. This is yesterday. This does not include today. And this was the big sell-off. Yesterday, we had an inside day, which is kind of a neutral experience. We opened lower here, got some selling, and then started to squeeze. Now we're squeezing. We came up to 88.5, which is our retail price, and we have not taken out yesterday's high, and now we are rotating. To me, we're just trading this at the moment, So for me, 6109, 6100, targeting for this, take out yesterday's high. We already got below yesterday's low, so that's done. So this. And we don't have to go anywhere. So is the trend up or down? Well, for me, at the moment, the trend is up. In the time frame I trade. Now, if you think the all-time high is going to be that all-time high is going to stick, then yeah, maybe the trend is down. But to me, I see buyers. I see buyers. I see buyers. I see buyers. Now this, everybody, why did it go down? Well, sell stops. And the fact that we haven't taken these guys out yet is somewhat bullish so far. Because for today, I was looking at if we broke out of this, that we could come down and start working into the stops under here. Same concept. Didn't do it. So if it didn't do it, I've got to be on the long side unless something changes. I just try to get aligned. Anyway, I hope that answers your question on the trend. Trend is also a definition of fractal. What is your time frame? Well, I'm trading this and then this. So I'm trading as a day trader. This is what my thing is. So the trend can be up and I can be short. If I think the trend is up, I'm going to cover my short and look for a long. And I know where I'm going to do it. I'm going to do it there. I'm going to see what happens out here. Resistance right there. If it keeps going, then I'm back on the gravy train. For here and here. Here, here, here. That's my targets. They're not trade recommendations. They're just targets. Hope that answers your question about the trend. Questions? How we do it in YouTube? Please give a thumb up, a like if you're finding this useful and interesting. The idea is not to be keeping busy. We're not hourly workers. It's just waiting for your trade. Remember where the resistance is. It's right here. IBF, resistance is there. Resistance is coming from here, right there. That's your resistance now. Outside edge. So we can rotate from here. So if you're along from here, the IB is where there's going to be stops. So it's target. You could also just be scaling here at the mid and the VWAP in case you get sellers. Possible, right? So you'd have a long to there to there. Now, and then it's trade management or, see, this is another area that you have to become comfortable with. Every trader has their own sense of comfort. How do you manage your trade? Do you leave your stop out here and risk giving it all back? How do you handle that mentally? Do you just scale along the way? So there and there. And then you hold a runner for the new high of the day. Or are you out of the trade here? See, the thing is, there's no right or wrong answer. There's only, because let's say you're running a 2-lot. Well, there to there. And you could be done with the trade. And that's a fine. There's nothing wrong with that. You almost got yourself about 10 points, another 10 points. So from the IBF, you have about 10 points. Going this way, you have about 10 points. If you have another runner, then you would manage this and you're going to go for this up here. We'll see how it plays out. But that's all part of trade plan, and that's what we work on in Trader Lab, is you got to know what you're going to do. It's not making it up here because we don't know what's going to happen here. So we have to know what we will do because that's where it needs to happen. Our behavior, not what's going on here, because this is random. And I think that's pretty hard for most developing retail traders to accept. Because, all this thing, yeah, I knew it was going to go there. Yeah, well, then let's only take the trades that we know are going to go somewhere. So then we don't have losers. No, we don't know what it's going to do. We know what it might do. And the thing about the auction And the profile is we can identify where it might, where behavior might happen. That's why these are on the chart. And what creates it, to understand the language of the market. We know, why does the market come here? Which is a target. If you're in TraderLab, you'd understand it. Doesn't mean, and here's the other part about this. It could have just kept going, or it may only rotate, come out here, and then continue. It can do anything. So our job is not to predict. But if you understand how the market works, which is what the TraderLab is about, helping you understand market mechanics, you would understand why this here is an important level in alignment with that, and you have your low volume outside edge here. That's alignment. So if I'm in the long from here and I get this, let's talk about what we would have right here. First of all, there's my resistance. It's drawn from over there. I see my seller. So right here is a change in behavior. Have you seen a seller like that? First time, isn't it? Right here. Isn't that a change? So what happened here? Let me show you some order flow. Right here, I have buying delta, and my sellers break below my buyers, which are there. So I know there's a passive side active up here because the delta, if that's the aggressor, why did the market break down? Because there's the limit side, the passive side. So I know now I have a sell trigger. Now I can put my volume. Now I'm going to go where I was so we can just look at it in isolation. This is the chart volume profile. So it's showing me the volume, only what's on the chart. So right now I'm isolating this little consolidation. This is a buy sweep. This suggests also the potential for a reversal. So this is all part of order flow. So I have this saying maybe reversal. I've got my selling iceberg stacking over here. That's nice. I'm going, and this is what's sitting in the book from previously. I have an outside edge here, and I have my IB, which was a target. If you remember, I mentioned that. So then, whatever happens, happens. Now what? Volume is here, right here, and I break the volume. I'm going to put a little line on it so we can watch it. And then what it sets up here is this is now a consolidation with a break. So I'm just going to mark it, and you can see where this is. So what this does, once I'm here, my volume is here, and this is where the resistance is. I put my stop a couple ticks over here, and I can get short there if I want, and a stop has to be above this, if that's your trade. Or you just take your long from here, and as soon as you get the sell trigger, you're out. That's the other possibility. You don't have to short it. You can just be saying, well, if the trend's up, I'm going long. So there. And then sell trigger, exit, hit the eject, and the canopy blows off. Ed, I don't have a sense of, outside day, inside day. I just follow it. So if it does this or that, then I, adjust to it. I know this is a structured trade and it has alignment at this outside edge. So that part I know. I'm above the overnight volume point of control, which means too low. I know if I get my IBF, which was this one, I can come here and fall out the bottom. It could do anything. If I see my buyer and I see my absorption here, I can cover if I'm going for something, or I'm just doing mean reversion, which is this. When I get my buyer, this is my resistance. Now, I'm not done with the idea of the longs at the moment. I could just see the thing for me, if I take a trade from here to here, I'm perfectly okay with it. They're roughly 10-point trades. And if you're running a 2-lot, you're probably getting 10, 11, 12 points out of each of these, just these 2 rotations here if you're in TraderLab. So right there, you've got roughly 25 points of just on these two. Never mind the rest of them. Now we come outside. Where's my outside edge? It's out in here. This is an outside edge. So now I have to look over here. I got my VWAP, my mid, I've got support, and this is my edge. So you can see it there. So I want to watch this. If I get back above here, then I'm going to continue. Microstructure is right here. The buyers are here. The buyers are here. So this is support at the moment. If you wanted to take a long, it's up to you. If you did take a long, you have to protect under here and preferably under here. Let's just mark this out a little bit. So your support's this high volume and this. So we have these areas right here as potential support. If I come outside, I can then come back. And then this is my resistance out here, out there. So I've got basically support, resistance, and then you got the high volume right in the middle, which is your mean. So if I get long out here, I'm trying to come here to get risk neutral. And then you put your helmet on. Let's see what it does. These are not trade recommendations. I mean, we're in a very tight range now. And there's stops under here. So you need to be always looking left. So you got your stops. So the area is going to be here. So we want to be looking out in this area for behavior. Let's just see what it does. So I have support. This is an outside edge in here. And this is where the stops are under here. Why would there be stops? Well, you got mid and you have this here. Stops are under here. So if we can pop this and hold this, then we might come back or not. Let's just see what it does. This is about all it gets. When it comes to trading, for me at least, I know where it might go. And then I also know where the stops are. How would I know? Because retail traders do the same behavior. They all do the same thing. They're like lemmings. This is a weak low. There's stops going to be piled under here. Where do we just tick? There. This is a long, possibly. Let's look at it. There's your volume right here. We got our stops out. This is your support right in here and right here. Let's just see what it does. Now, what's so important for retail traders is to look left. Is everybody tracking? Justin, there's if you go to the document section and where the webinars are, there's all kinds of explanations about those trades. And they are covered in just about every webinar I do. So you can find loads of examples. There's 60 PDFs of those trades, and you'll see them over and over and over again. The PDFs look like this. Here's IBF right here, I think. I don't remember. Yeah, IBF. IB low. This is the trade I was showing. This is the IBF, except it's from the long side, not the short side. Anyway, there's 60 of these. You can download those. Examples of a lot of the things I discuss here. Now, these are broad strokes, but you'll get an idea. And the idea for traders, all traders, is you come to Trader Lab, and then with the support of a community, you can learn the methodology. But it's not, everybody does this differently because everybody kind of finds their own groove in the sense of time frame. There's some traders who are going to be just doing this to this. And then there's other traders who put this on and the stops at the low of the day, and then they go to the gym. I always found kind of interesting. I couldn't do that. But we do have some traders here that'll put a position on, and then it has to fall apart. The trade has to completely fail, and they'll ride through these. And how do you know what's the right thing? Well, part of it's emotional or psychological, and the other part's statistical. If you knew that if you put a trade on and once you got in position that your stop was at, let's just say, the low of the day, and you had this move and then it counter rotated and you left it, would you be able to leave your stop down there and maybe give all the MFE back? Well, there are some traders who can do that. Now, here's the thing. Suppose you found out that by doing that, in spite of giving back all the MFE, that over time, that was the most profitable approach. Psychologically, would you be able to still do it in spite of it? Or would you lose it mentally if you give 40 points back or whatever? I'm getting a question about the statistic for the mid. I don't really have a statistic for the mid. Previous day's mid, but not the current mid because the mid's moving. So, but the thing to know about the mid is retail traders behave at the mid and they put their stops at the mid. So for me, it's a target. It's not a place typically for me to interact because this is what retail traders do. And we know they don't have a good outcome. I've kind of found, and I used to do that too, forget, oh, it's at the mid, let's buy the mid. Oh, the market's going up, let's buy the mid. Well, this is rotational. So for me, the only time I really think about the mid is in a directional market. So I don't think about the mid in this market except as a target, and because retail traders mechanically buy the mid and put their stops here. So I kind of look at it a little differently, but there's no statistic. If you mean the current mid, if it was yesterday's mid, I think I have a statistics for that. I'm going to have to look here. Like today, there's a 29% probability-ish, past performance, not necessarily indicative of future results. You got to vet this, that we get to the previous mid. So that's not so good. Wherever that is, and I don't even know where it is. So that's that. I don't use that one. Just saying, Hope that answers your question. So what is the condition of the market, guys? This is called context. We're in a rotational trade. The last long would have been down here. The short before that was the IBF. So now we're still rotating. So here's where trade management comes into the thing. If you understand in trading you can't predict, all you can try to do is get an alignment with structured trades. And then part of a structured trade is risk management. And part of that means getting risk neutral. So that's a minimum 2-lock configuration. The job of the first contract is to buy the stop on the second one. And then either you trade to a target and the trade's over, or you trade with a trailing stop process, and you will be taken out. And there's always going to be a debate because if you're using a trailing stop, you're always going to leave some dollars on the table. If you use a fixed target, you may also leave a lot of dollars on the table. And because the market's random, you're going to constantly thrash based on the outcome of the last trade. That's our human nature. The only way to make it tangible so it's not emotional is to keep a record and statistics and find out over a large sample size what gives you the best yield. I mean, there are those days when you get a bullet train, but that's an outlier. Most of the time, this is kind of what we're dealing with, So you need to solve for the high probability, not the outliers. When I used to do system design and I would do testing, I would remove the outliers because they would skew things and then try to get more what's your regular day-to-day condition. This is pretty much our condition. Now, what's it going to do, right? Don't know. Resistance is here, out here. We clear this. We got to get through this, and then we can go to our targets up above. If we can't go anywhere, we can fall out the bottom. It can do anything. So in trading, it's not about predicting. It's really about maybe an alignment. Just no way to know. So let's watch what it does here. Right now, the market is in park. So if you got long here, you would be risk neutral, and then you're just hanging out, And then you either have a higher time frame perspective because you're going for, yesterday's high and all of that, or you just manage your trade and you're out of it. It's all up to you. But the answers to these questions about what to do are decided based on a game plan or playbook that you assemble outside of market hours. So when you see whatever, if this is meaningful to you, it is to me. If it's meaningful to you, you would then do something because you'd anticipate when you see this, the possibility of a rotation down. That's what you would know. And then you either exit and you don't take a short, you just exit and you're looking for another long, or you trade both sides and you can short this to come back. And, mid VWAP would be your target. And then you got to see what happens. This is all part of trade plan. And nobody can give you your trade plan. That's why you come to Trader Lab. Everybody kind of creates their own trade plan. Everybody is different. So that's why you can't just go into a chat or hang out with an educator and then do what they do. I'm more risk adverse. I use very tight stops. I probe the market for location. Other traders can't handle taking a stop, which means they probably can't be in this business. But or they take very wide stops because they're okay with that. I'm not. I use tight stops, but then I'll take more stops. See? So I use structure. So if I get a short, my stop is not there. It's got to be maybe 3 ticks above in case I get a pop and it's just a little stop pick. So that's kind of how I do it. That makes sense. This long is okay. And this is your resistance, So, and the IB, remember the target. The target for this was back to the IB. And then either it continues or it doesn't. And this sets up a failure right here. And then you could be rotating back here. But you don't have to be doing anything here. You might only have a couple trades a day. What most developing retail traders think that somehow you're busy all day clicking the mouse and that you have an ATM in the basement. That's really not what this business is, at least in what I have found. I found that the more frequently you trade, the more you're putting risk on, the lower your probability is of being profitable. Because then you're going to overtrade and you're going to be responding to every little wiggle. We're not trying to trade the wiggles. We're trying to trade the broad strokes. Because the broad strokes is where we get paid, not in these little getting involved in this kind of a thing. Just an opinion again. But this is what most traders think trading is, that it's somehow a video game. It's not a video game. It's a business. And I know scalping is very, very enticing. because we focus, many of us early on in our developing careers focus on a win rate. You can have the highest win rate on the planet and go out of business, you know. And most of us think that if we go for shorter targets, we're going to have a higher win rate. It is not in the win rate. You can have a 40% win rate and be very profitable in this business. It's in the range, and the net as it relates to the risk overall is really how you measure yourself in this business. It's not the win rate. That's not what you need. It's not the win rate. It's what you get when you put risk on. So if you put yourself at risk less and go for larger rotations, and they don't have to be, you know, but this is not what we're trading for, in my opinion. We're trading for, you know, this to this, this to that. And you could be trading from here back to here, or even here. You just have to manage to trade. But look at the range. You know, these are 10-point rotations. That puts pizza on the table, in my opinion. Not that you're going to get it, but even if you just get a piece of it and you're managing your trade, because it's all random, that's what's called, remember, risk reward. What am I risking? 2 to 3 points per trade. Well, if I'm going to risk, let's say 3 per contract, I've got to get better than 1 to 1. So I've got to get at least 2 to 1, you know. So I'm looking for 6 points minimum and more. Otherwise, you're going backwards. I hope that makes sense. By the way, if you're interested in Trader Lab, there's no cost. There's a link in the bottom of YouTube. If you're interested to come to Trader Lab, it's pretty cool. It's a community of traders with all different levels of experience. Our senior trader has over 50 years. I've got 45. And there's everything in between, from newer traders to old dogs. This is what it looks like. I think. This is the library of webinars. You know, why most traders using indicators fail, winning the day trading game, psychological stuff. Then there's documents you can download, auction market theory. And these are contributions by a lot of our members in the Trader Lab. That's 60 PDFs of structured trades you can download, reverse engineer them, understand. And then there's the best videos. There's all kinds of stuff in here. Then there's an archive. So there's all kinds of stuff in here that you can look at. And the community. And then the community, you can see there's a lot going on in here. A lot of great contributions. And if you're interested in Trader Lab, you're all invited. There's no cost. And there's a lot that can be learned here. The place, I think, I wish when I started trading in 1980 that, well, we didn't have computers, we didn't have an internet. So I guess I didn't have that option. For me, the option was buy a book. That was it. There he is. What a handsome lad. Anyway, if you're interested in this, feel free. Use the link in the bottom of YouTube. It's available to everybody, and there is no cost. And I'd like to welcome you to Trader Lab. If you're interested in it, come on in, say hi, introduce yourself, and all the resources, not only of the Trader Lab, but in the Bookmap Discord server will be available. And there's education on stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, options, market maker behavior, and a lot more. And it's all available at no cost. You can use that link in the bottom of YouTube if you want to, check it out. You do have to confirm your Discord identity so you're not a spammer. Every time I use the term spam, I think of those things that stuff that comes in the can. There's an experience. Please give a like. And this stream, I It'll be available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, take anything away from it you can. And thanks again for visiting Trader Lab today. And I look forward to seeing you guys real soon. Thanks again for visiting the lab. Please leave a like on the way out. Appreciate your help. Thanks again.